Go.
All right. Well, hello, everyone. Welcome to Real Women Real Estate, episode 9.
Whoop, whoop.
Whoop, whoop.
Oh,
Whoop.
whoop, whoop. Yes, can't believe it's can't believe this is already our 9th episode. Time is flying. We are back bringing you a very special guest. We have an awesome kind of part 2 to what we talked about last week as far as lending and what that looks like. But before we get into our special guest, before we get into those questions that we have for him, oh, I kind of spoiled the surprise. We have our first male guest, guys.
Our first male guest.
Yes.
Oh, y'all ain't tell me that part.
I know.
Yes.
You know, we were waiting.
It's an estrogen show.
Oh,
Yes. Sorry, Ray. Oh, and I almost said your name too. Okay, you know what? Let me say the quote and then I'll introduce you. Okay. So our quote for today is, when money realizes that it is in good hands, it wants to stay and multiply in those hands.
Yes.
And that is by Dowu Koyenikin. I said
Very
it.
good.
That was great. That was
Very
great.
good.
Okay, enough of that. Let's talk about our special guest. Like I kind of already previously insinuated, we do have our first male guest today. His name is Mr. Raymond Sykes, and he's a senior loan officer for New American. Is it New American
funding.
Funding? Oh, I have that wrong. I'm gonna redo that.
Mm-hmm.
I'm gonna say that again.
Edit number
Edit.
1.
Okay, let me get it together. Today's special guest is Raymond Sykes, who is a senior loan officer for New American Funding. With over 7 years of mortgage industry experience, Raymond has closed over 300 loans in 15 states.
Wow.
Raymond, yes,
Yeah.
that's a lot.
That's huge.
I'm surprised about the 15 states.
Yeah.
Right, because I thought they were regional, but let's get there. I mean, you know.
Yeah. This is intro, y'all.
I know.
It's so exciting. We can't wait to get it pumping. Let's go.
Raymond has hundreds of positive reviews from the people he has assisted, so it's safe to say he goes above and beyond for his clients. Recently, he has transitioned to a purchase consulting role, but still actively assists current homeowners. We want to welcome Raymond for being our first male co-host to the Real Women Real Estate podcast. We were super excited to talk to you and learn more about your journey.
I appreciate you guys having me. I really feel honored Kim didn't share this portion with me, that I'd be the first.
It was intentional.
No, I really appreciate it. No pressure whatsoever.
No pressure. First male guest. Okay, so let's start off with the basics, because this is considered the basics session. What is a loan officer and what do they do?
So my job is essentially, or it consists of essentially knowing what sort of loan options are available to whichever type of client that I'm speaking with. Essentially what we do is we gather basic information from each one of our clients about what sort of goals they have, what sort of, like what they're trying to accomplish, long story short. And then once we identify what they're trying to accomplish, from there, we kind of, touch on some of the income. Obviously, that kind of gives us a gauge as to what you have coming in on a monthly or maybe yearly or weekly or however you're familiar with the basis. And then in addition, we touch on, a little bit of your credit and your liabilities to get an idea as to what you have going out. Between the two of them, we can derive at what sort of monthly obligation we can actually qualify you for. And then at that point, we essentially are doing a little bit of reverse engineering to identify, a total loan amount if you're looking into purchasing. But if it's a refinance, then at that stage, we're just trying to identify, whether you're trying to save some money monthly, maybe you're looking to consolidate, perhaps you want to use some of the equity to, invest. Maybe you want to, continue building out that kitchen, whatever it is that you have, whatever sort of goals you had set. My goal is essentially, or my job is pretty much to gather all that information and identify the best loan option for you, and then gather the information that we need in order to submit that to essentially what is termed as an underwriter. And they're just the individuals who kind of get the final say so as to whether or not you're approved for a loan program. But for the most part, our job is just really consistently answering questions, making sure that we're responsive to our clients. Just it's a larger customer service job, to be candid with you. Just pays a little better.
All right. So question, is that, would you say that you're the first step to a home buyer? So first time home buyer, would you say that you're the first step, or what is your approach with working with a first time home buyer?
All right, so without stepping on Courtney's toes, like I think in the past, most people would actually go and talk to their realtor first. Like they would eventually say, hey, you know what? I know somebody who knows the market and is familiar with what price points are, out there, in addition to like what homes might be available, because realtors truly, they have like a database. They have information that we as like, just normal borrowers or, potential buyers just don't have access to. So I think in the past, the goal was to essentially just align yourself with the realtor so they can kind of put you in a position. And then from there, they'll help you find a home and then assist you when it comes to a lender and so forth. Being that nowadays, there's a lot of direct lending taking place where you used to go strictly to like maybe your local banks or credit unions. Now that there's a large, I would say, presence online for direct lending, we've kind of eliminated the requirement to have like the larger overhead. So our rates and our costs are typically a little bit more competitive. So what we found is that a lot of our clients are coming to find out what they're approved for. They want to know exactly what their monthly payments would be, what they need to come out of pocket with, or what they can anticipate before they speak with the realtor. And I think it actually bids well for the realtor just because they know that the client's actually done some sort of due diligence. They know what they can afford. They know that they're actually serious. So in my experiences, I would suggest talking to one of us first, merely just because, again, when you do talk to your realtor, they'll know that you're ready to move. They'll react a little differently when they know you're legitimately trying to purchase a home, as opposed to just maybe, sightseeing. Maybe you just saw the open house and you wanted to just go see what was inside. Nowadays, I think a lot of realtors are requiring you to have a pre-approval letter or a pre-qualification letter before, they waste their time, or not waste their time, but before they spend time trying to show you, different residences.
I can agree with
Real
that.
quick.
Right now.
Wait, real quick. Ray, we can hear Ashley in the background.
Okay, let me shut the door. Hold on.
That is a beautiful picture.
She's good. Ashley.
She made that?
Her interior skills are good.
Oh.
Okay.
Like,
no, I actually made that like on the Thursday one week.
Wait.
You made
I didn't believe that when he said it. Not that I even know you like that, but it was the way you said it.
Oh my God, I'm so gullible. Gosh.
Everybody was like, wait, hold on.
3 times. You ain't never mentioned that before in my life.
I was like, how did you get the gold outline? You know what? Never mind. Courtney, go ahead. You had a question.
No, I just wanted to say that. So right now, I had an agent tell me, unless your client has been properly vetted, you cannot come to this property, even though it's vacant, even though just during COVID, just don't want extra looky-loos inside the house unless you are really serious. Have you gone through the virtual listing first, and have you fully vetted them? Send over that pre-qualification letter, send over everything you possibly can, and then you can come and see the house. But no looky-loos coming through during COVID. So just working really well with the lender, the loan officer, making sure, hey, are they legit? Are they for real? Because I can't come in here and be playing around with the agent and a listing. Like, we need to be coming in here serious.
And there's a slight difference between what we can offer between a pre-qualification and a pre-approval letter. A pre-qualification letter essentially means that from my own personal experiences and knowing what you've shared with me as far as maybe a phone conversation or perhaps even through email, that I think that you would be qualified for a purchase based on the information you shared. Typically, I'm not going to issue a pre-qualification letter without reviewing credit because I can't even identify like kind of a ratio without it. But it still allows me to, give you something so that as far as a realtor or maybe even an open house is concerned, you can go out and actually start the process. But what I think you're really looking for is a pre-approval. That's really what you have to provide documentation, like, pay stubs or W-2s or whatever they require as far as a lender is concerned. I mean, at that point, they're going to just take all that information, submit it to an underwriter, and then they'll place their stamp of approval on what would normally just be that pre-qualification letter. But at that point, you've actually solidified your financing. And I can attest, and I'm sure you all will be as well, that, you know, the first time you purchase a home, there's probably nothing that's going to offer you more peace of mind and solace than knowing that you've already done the hard part.
Right.
That's really good information. I wasn't aware that there was a difference really between pre-qualification and pre-approval.
That's
so thank
huge.
you. Yeah.
Huge.
Yeah.
The pre-qualification portion, again, will, you know, they have talked to somebody, but as far as them like actually proceeding and like offering them the information that you need in order to actually facilitate a loan, they're just, you know, they haven't gotten that far quite yet.
Gotcha. Okay, so want to just pick your brain a little bit. You don't have to get too specific, but we're talking really from the perspective of a first-time home buyer for this question. What types of home buying programs are out there? I know we've heard like, oh, there's different qualifications you have to meet. You don't have to have a perfect credit score. You don't have to have a ton of money for a down payment. But can you give us like a little bit more specifics, like what are those programs called? And if somebody's listening and maybe they're on the fence about beginning the process of buying a home, what types of programs should they ask their professionals for?
I should probably ask, is this like predicated for like nationally, or like, are we talking like specifically in Texas? Are we talking specifically in Cali, or
we have listeners in every area code.
So maybe go national.
National.
Okay. So from a first-time home buyer standpoint, typically every state offers some sort of down payment assistance. To my understanding, I think from like California, I know Nevada, Texas, like Washington and Oregon, like all the states that I'm actually licensed in, I know without question they offer some sort of down payment assistance. It's going to vary from state to state. What they offer in California is going to be completely different than what they would do in Texas or Nevada or any other state for that matter. There are going to be some similarities between them. Typically, you're looking at, I should take a step back. I'm sorry. I just thought about something. When we had this coronavirus and the mortgage industry started seeing, and I'm sure you guys are aware, the rates started dropping significantly to the point where everybody started like wanting to refinance or buy a home. What that meant to the mortgage industry is that normally we see about 3 or 4 million applications per month as far as an industry is concerned, not my company, but the industry. That last month we saw about 12 million applications. So it just kind of overwhelmed everybody to the point where lenders started increasing their rates despite what the feds were willing to do because they just don't have the manpower. In addition, what took place was because there were so many adjustments as far as pricing is concerned throughout the course of a day, the lenders started to adjust their guidelines for their minimum requirements. What used to be, and I think it'll eventually get back to that, so that's kind of the reason why I brought it up. What used to be for an FHA loan or a USDA loan or a VA loan, all the government loan programs that require the least amount of down payment. So usually kind of, I guess, identified with maybe more first-time home buyers. They used to be able to get in with a 580 credit score. As of like 2 weeks ago, I would say a healthy portion of the lenders increased it to about 640. So that's knocked out a large portion of individuals who were maybe considering purchasing a home or in the process, or were just, shopping around at that time. I will say that some lenders will acknowledge that if you've already completed an application and your credit was less than 640, they'll still proceed with the loan program. But with that being the case, as far as first-time home buyers are concerned, the minimum amount that you can actually go into a home without down payment assistance is usually like 3%. That's pretty much across the board. There's definitely like a USDA loan option or a VA loan for the veterans, which doesn't require any down payment. But for the USDA loan options, it has to be in a rural area. It can't be like in a larger city. But those are probably, I guess, if you will, kind of again, the parameters for first time. Again, they've kind of adjusted more recently within like the last 2 or 3 weeks just because of the uncertainty with the market.
Yeah, I've heard that, and I sent that to the ladies that that they're changing the requirements for that. Also for VA, I heard that they're no longer covering 100% of the loan anymore. Like they've changed that as well.
In the
So
last
that's
week?
in the last like 2 or
Yeah.
3 weeks. So that's only if you are that's if you're refinancing or taking cash out or equity out. If you are buying, they'll still finance 100%. So you still don't have to have a down payment from VA. But if in the event that you're looking to take advantage of the equity in your home, with the exception of Texas, I mean, you really couldn't. Texas, you can't do it up to 90% or 100% period. But every other state has gone from 100% down to 90%.
Wow.
Yeah. And then are you still able to lock in this low rate, or can you promise this rate that as of today, if we're coming in, can you promise this rate at this time?
Absolutely. So what typically takes place in a normal application process or a normal conversation is, as I mentioned earlier, we have the talk about what you're trying to accomplish. Excuse me. We discuss a little bit about your income, your credit, and at that point, I can share with you, hey, this is what we can offer you based on whatever it is you're looking to accomplish. If you're at a higher rate and you're saying, hey, I want to reduce my rate, and I say this is based on this, your credit, based on the amount of equity you have in your home, the type of residence it is, as well as the type of occupancy that you hold, this is what sort of rate and monthly obligation we can provide you with. And if you're willing to proceed, then at that time, we're locking in interest rates for a minimum of 60 days. When the market isn't as beneficial to home buyers and potential homeowners, it's usually like 30 days. It's like usually a 30 or 45-day time frame. But right now, just because, again, like I said, it's been so volatile, in addition to just such an influx of applications, it's about a 60-day process for us. Some cases maybe 90 or 120.
What do you think? I know you can't predict the future, and I'm going a little rogue, lady, so I apologize. But what do you think? What do you think the future is going to be? Do you think that the way COVID is we're starting to see a flattening of the curve, that interest rates are going to start to go down, or do you think that are they going to go back up? Like, what do you think is going to happen?
This is a little different than what took place in 2009, like whenever the financial crisis took place previously, because that was actually real estate and mortgage related. At that point in time, we were just handing money out like it was free and didn't care if you had a credit score. We were just hoping you had a pulse, and it was just like the wild, wild west.
Yeah.
And so it was a little different in the sense that there was just too many homes with not enough, quite frankly, legitimate and capable borrowers to actually afford and to even occupy some of those residences. So I do think that this instance is a little different because, granted, there's a lot of Americans that are obviously suffering and will be out of employment, which definitely will have an impact on just an industry as a whole. I do anticipate rates to remain where they are, though, for I'd say at least till the end of this year. It's an election year, so combination of what we're currently dealing with plus the fact that it is an election year, I think will constitute us remaining low. I also think that this industry is like one of the few industries that's like a requirement to actually sustain. As y'all are probably aware, when they bailed out people the first go around, a lot of the people didn't necessarily think that was necessary. I was probably just as, I would say probably just as, what's the word I'm looking for? Convinced that it wasn't as necessary as well. But in hindsight, the mortgage industry, man, it's kind of like a safe haven. Ultimately, there's not, I think, a safer investment in that most Americans are going to make their mortgage payment. And so that's typically where I think that, why I see like the industry in this particular epidemic kind of resuscitating. I don't think it's going to have the type of impact it did back in 2009. But I definitely think that the rates are going to remain low for at least the next year. They've never been this low, to be honest with you. I mean, I don't think I've ever seen where the Fed has actually went to zero. But even then, it doesn't necessarily, they don't always correlate just exactly, but I would imagine that they stay low for the remainder.
Yeah, and I think you touched on something that was really important. There was two things there. Number one, was this an election year? Rates don't typically go up during election year.
Really?
You want to get reelected, you better keep those interest rates down, right? And we know how our president feels about interest rates, just speaking out directly to the feds via tweet. I mean, I mean, who does that, right? But that's literally what happens. And then I think the other thing is just people being sick right now. A lot of the economists are saying that this is going to be a foreclosure, short sale economy that's coming up. So I know a lot of agents, in California are preparing for that because the houses are just so expensive here. So no, I think that's key. I think that's really important nuggets that you just dropped. Really, really important things that you just said. So I want to get back because I kind of took us off into a tangent because there's just so much just good information out there and just so much like uncertainty out there. But taking it back to the basics, taking it back to just learning 101, there's some differences between the types of programs. And can you explain the difference between FHA and conventional? And I know there's some obvious differences, but what are some things that we may not know?
Yeah, so from just from a basic standpoint, I mean, there's really 4 different loan programs that most people are going to look and qualify for. They call them qualified mortgages because they're backed by all government-sponsored entities like Fannie Mae, Freddie Mac. They're the ones that offer conventional loan options. And then Ginnie Mae is actually responsible for VA and FHA. And then obviously the United States Department of Agriculture is obviously behind any USDA loan option. So you pretty much find yourself within 4 different categories. For FHA, the requirement is 3.5% down. It used to be kind of referred to as the first-time home buyer's loan option, merely because the conventional loan option didn't always offer as low as 3%. It used to be one of those things that you had to put down 10 to 20%, which on $200,000 or even $100,000 can be a lot of money. So those are, I guess, the primary differences between the conventional and FHA. Obviously, veterans are the only ones that can take advantage of VA loans. And obviously, if you live in a city or if you're not in a rural area, you won't be able to take advantage of a USDA loan. But the one thing that I would share with most individuals or that I speak with concerning the two is that if you're utilizing an FHA loan, you're using it because your credit score is probably a little less than 700. I'd say maybe even a little less than 680, because actually at 680 you can still get some good rates with the conventional. But if your score is a little lower than 680, if you have a little higher of a debt to income ratio, the FHA has a little looser guidelines than perhaps a conventional loan. But if your credit is a little higher and you don't have that type of ratio, then I would say that you might want to move forward with a conventional loan option. Typically, you'll see that FHA rates are lower than conventional loan rates. And that's because the mortgage insurance stays on the loan for the duration of the loan, no matter how long you've been in the loan, no matter how much equity you end up obtaining. Since that is the case, they typically have a little bit lower of an interest rate. But whereas with a conventional loan, the mortgage insurance is referred to as private mortgage insurance. It's actually issued by a company that you or I could own. And we're just ensuring that this particular borrower is going to make their payment. That PMI is actually based off of the same things that you would be based off or qualified for when it comes to a mortgage. So whereas an FHA doesn't take into consideration your credit, doesn't take into consideration your equity in the home, it doesn't take into consideration just the normal, I guess, requirements for a loan. The PMI on a conventional loan takes all that in consideration. So I would say that the biggest difference, again, is just lower rates with an FHA, and it's going to be mortgage insurance that sustains throughout the entire life of the loan. And then on a conventional loan option, you're looking at having a little bit lower of a PMI. And obviously, you can also get rid of it once you have enough equity in your residence.
So I have a quick question for you. And I think Kim and I were discussing this before on that piece about the mortgage insurance staying if you have like an FHA loan. Mm-hmm. How do you, I know you said like it stays there no matter like how good your credit is, how much equity you get, but like, can you like refinance to get out of that? Or is that the only way to get out of it? Is to refinance? It's the only way to get out of it.
Yeah, it's to refi or to sell your house. Unfortunately, that's the only 2 ways to get out of the FHA mortgage insurance. With a conventional loan, if you get like, for instance, the PMI, if you're in the loan for typically like 10 or 11 years, the PMI will eventually fall off. And if your credit is high enough, and this is kind of like a really good would say it's probably something that most people don't necessarily touch on. But even if you don't have like the 20% to put down so that you are going to maintain PMI, if your credit is extremely well and you have like really good qualifications, high credit, low debt to income, the lenders will offer you what's called, or they can offer you a lender paid mortgage insurance option. So the rate might be a little higher, but that PMI that you pay each month that goes to somebody else's pocket, that doesn't increase your equity, doesn't help with your principal balance, you might get a little bit higher of a rate, but you can get rid of that PMI, and obviously you'll save money monthly. And with the money that you're saving, if you do reapply it to your mortgage or your loan, obviously you'll pay your house off a lot sooner as well. But to answer your question originally, for an FHA, the only way to get out of that is to refinance out of it.
Okay, thank you. So, guys, we're at 5 minutes. Kim, are you gonna pause here or?
Go ahead.
Okay. All right. So, certainly just want to appreciate you for your time. I know we've kind of had you do some mental gymnastics with some of our questions.
No, not at all. Not at all. It's just really the market. I mean, the industry is like, it's like, I'm sure anything else in life, man, it just adjusts, and it's been adjusting so much as of recent. I'm trying to make sure I'm giving you accurate information while trying to make sure I'm still up to date with the information I'm giving you. So, but I appreciate you guys listening to me ramble. So go ahead with the next.
So let's talk a little bit more about your personal career, right? You said you've been in the industry for over 7 years, and you are able to do loans in over 15 states. Number one, how did that happen? How are you able to do it in so many different states? And then number two, what is your recommendation for someone considering a career as a loan officer?
Great question. So how did I get so many states? I started working for a company called Loan Depot, which is it's a direct lender. I'm sure you guys have heard of Quicken Loans, Rocket Mortgage. Everybody's heard of Quicken Loans, Rocket Mortgage.
Right.
Yes,
All the
mortgage brokers. Yes.
Yeah.
All
They're
the
like
commercials.
Exactly. They're kind of like the Walmart of our industry. Yeah.
Shade.
They're everywhere. They're all
Shade,
over
just a little bit.
Well, no, they're just a really large institution. And Loan Depot is kind of similar to, I'd say, just like not necessarily Loan Depot, but New American, the company I work with now. They're kind of more like a Publix or like a Trader Joe's. They're the same husband and wife that opened the doors in 2003, are the same husband and wife that keep our doors open currently. And there's like a direct lender kind of in between the two of them, between Quicken and ourselves, and they're referred to as Loan Depot. And Loan Depot was actually started by a gentleman by the name of Anthony Shea, who used to be the CEO, if I'm not mistaken, at E-Trade, and there was another company that he also helped create. And he wanted to get back into mortgages. And in doing such, he realized that he needed to create a mortgage officer, a loan officer, that was in a position to really just communicate with people, like could just have personable skills. And he was telling us the story, or the reason why he kind of like, or how the opportunity arose was he had a young lady that he would go see at a restaurant that he, one of his favorite restaurants in California, I can't remember the name of it, but the young lady that he would go see, everybody that he would bring, all of his clients that he would bring in to see, to meet, she would take care of them, and they would always rave about her and always rave about how wonderfully she does, and how much they wish that she could be a part of their staff and things of that nature. And so he'd asked her, he's like, how much do you know about mortgages? And she was like, I really don't know anything about mortgages, which I honestly fell into the exact same boat when I first got into this. And he mentioned to her that, I'd be willing to teach you everything you need to know about mortgages, because you have a trait that we just can't teach just regular bankers, people who are just, in a, institution that are, either tellers, or, they actually do mortgages or whatever they do. They just don't have that personality. And so he essentially brought her on. And from that point forward, it kind of opened the doors for other individuals like myself, who didn't have any mortgage experience, to at least find out what was available to us. And from that, and once I actually got in the door, somebody actually suggested it to me. A friend of mine was like, hey man, I've learned from waiting tables from you and bartending, and obviously you went through the food truck, phase. I think you'd be really good at this because you know how to speak to people. And I'm like, well, what do you do? And he's like, I'm a mortgage officer. And I'm like, well, what does that entail? He starts telling me a little about what, his day-to-day routines are. And I'm like, man, I don't know anything about mortgages, man. I don't know if this is a good look for me. And he's like, no, just trust me, man. So I went to the interview, and the interview was like a group interview. So I just remember sitting there and being like, man, I'm not really sure if this is what's for me, but I will tell you, and I know this kind of like from a spiritual standpoint, I was 29 when I first got into this, and I remember being in the hospitality and service industry and telling, kind of like not telling myself, but recently being baptized like the previous March, I had been praying. I had been like literally pleading and praying, like, Lord, please get me out this industry. Like, I enjoyed it. I think I've gotten out of it what I intended on it. Like it was, kind of running its cycle at this point. I felt like I was just kind of spinning my wheels, and I was turning 30 at that May. And I was like, just whatever I got to do to get out of this industry before I turn 30, I will be forever indebted. Heavenly Father, just get me out of here. And the interview took place on the 28th, and I started working on that on the 30th, like 2 days prior to my birthday. And the whole like premise of the reason why the CEO at the time was comfortable hiring me was because he was very, very much in love with the fact that I had a bacon food truck. Like the whole idea of me opening a food truck that was centered around the cuisine of bacon, he was just like really, I guess impressed by, because he was like, man, to see something go from on paper to actually come into fruition. I think that was kind of like the, I guess the seal. And once we get into Loan Depot, their goal is to teach you mortgages, but they also have to, in order to be a mortgage loan officer, you have to pass a certain amount of credit checks. So you can't have like a lot of derogatories, anything that's outstanding, like collections, judgments, anything of that nature. You have to get that taken care of. And then in addition to your credit and your own personal, I guess, finances, obviously we have a background check, make sure that, you don't have any sort of felonies, no sort of financial discrepancies that's, taken place in the past. And then we also have to do a lot of testing. We take I say, or I'll put it this way, the whole training process was approximately 8 weeks. 6 weeks of it was studying for the test. The 2-week portion was just the sales and, hey, we can teach you mortgages because, now that you know what the products are and know, how to talk to people, what you're actually selling, we can teach you how to put the stuff in the computer and so forth. But the 6-week portion was just learning how to pass the test. And there's specific state tests for certain states, and then there's a general test for like 33 states. So as long as you pass that general test, you can be, you're essentially qualified to at least apply for a license for at least 33 states. I passed that first, obviously that general test, and then there was some additional state testing that they wanted us to actually have because it benefited the company to have certain individuals available for those specific states. Like, I will say that in my experiences, I've worked for 3 different companies, but each one of them has had a office that's been a headquarters here in Texas, Dallas to be specific, one in California, Arizona, Michigan, and typically somewhere on the East Coast, like North Carolina or maybe even Florida. But they always have them in those different time zones so that if you're, trying to talk about mortgages at 7 o'clock on the East Coast, you're not, talking to somebody who's on the West Coast who's still trying to, wrap up their night before. So it is one of those things that, like, that's how they kind of identify with how many states or how you're going to get states. And initially it was 12, and then every place I've gone, I've just kind of, I guess at that point just started adding additional states. But it is a life changer, man. I don't necessarily know exactly what I would have been doing differently. I got here to go to UTD. I feel like I was, in a very good position when I left school or left home or left Houston. I graduated from Bel Air, and I had every intentions of coming out here to go to UTD and finish in like 3 or 4 years. But got, like I said, into the service industry and started doing service industry and insurance and all kinds of different things. And then finally found my passion or purpose, I guess, with this, just because I don't really know what other career I would have actually done this much in this well, or felt like I've been as successful.
Now that you've seen some of these deals coming across, are you interested in investing now that you kind of dabbled into the mortgage side? Has it piqued your
Absolutely.
interest to see where you can expand at? Buying some
Absolutely.
land?
Yeah, the goal would be to essentially do the same thing. I mean, Ken and I touched on it a little bit, or have had conversations a little bit, but the goal is to essentially just utilize the first property to kind of, I guess, kind of slingshot you to a portfolio. I want to kind of own one of everything, whether it be a townhome, a home, a multi-unit residence, like a ranch type like style residence. I just want to put myself in that position. But the one thing I wanted to do first and foremost, because when they first brought me on into this industry, was to primarily do refinancing. So with the company I'm with now, they've kind of transitioned me to doing primarily purchase, and I wanted to learn on somebody else's dime how the purchase part works, because once I get into the home, I know exactly what I need to do in order to try to take advantage of it. But how to actually get into it in the first place was kind of a unique situation for me at the time.
Well, that's the same with a lot of our listeners, you know, so you fit into the boat of a lot of our listeners that one, you're knowledgeable, just like Ebony, knowledgeable on the mortgage side, right? But not necessarily knowing how to invest, which is what we talk about, right? Is how to get into the investments and the first time home buyers, and how to, what is leading you down that path, and how do you get there, and what that looks like. So for you, that's really good that, you know, like you said, you're learning on somebody else's dime. That's awesome.
Yeah,
That's the
learn from
goal,
other
man.
people's mistakes.
Yep, on
That's the goal,
somebody
man. Actually,
else's money.
my guy brother kind of put me on that, man. He was before he started doing his own thing with his as far as marketing is concerned, but he was telling me learn on somebody else's dime first. But that's
So
it's been a blessing.
on the investor side, what do you see as, how as a loan officer? I know how you guys can be beneficial, but tell me how a loan officer can be beneficial for an investor.
So I'll be frank. The one thing about investing, and I mean, again, you guys might be able to touch on this probably a little bit more, but to my understanding, there's a portion of you that is always going to want to take advantage of somebody else's money.
Ooh.
And I think that's
Always.
that's primarily where it boils down to. I mean, if you can find yourself in a position where you don't have to liquidate all of your finances to be in a position to still take advantage of what it is that you're trying to accomplish, then I think that there's a win-win situation for all parties involved. Obviously, the lender is going to benefit just because they're charging a rate of interest. You're going to obviously benefit because you're getting the residents of the property that you're looking for. And then obviously, if there's a tenant or tenants involved, they'll obviously have somebody somewhere to, do whatever that they're requiring to do. But I think it's just primarily just a simple fact that you're not utilizing, and you're not utilizing all of your liquidable assets. I would think that's primarily the biggest benefit.
And then another question, do you guys get people who are refinancing from, say, a hard money lender over to a conventional loan?
Absolutely. So as long as you, have deeds or titles to show proof of your ownership, then absolutely, that's one of those things that happens probably a lot more often than not. I think people go into like a construction or like a new build, and perhaps don't necessarily want to go through, or sometimes some lenders don't actually offer construction loans. So they'll get the house built and everything will come out, the way that they need it to. And we'll send out an appraiser to make sure that everything is, as far as compliance with the state or the county that you're located in. And as long as that's all good, then there's no reason why you can't take advantage of a lower rate. Again, the difference between qualified mortgages and there's other mortgage options that we offer. For instance, we offer bank statement loans. We offer, loan programs where, for instance, like if you're self-employed, and I'm not sure if I saw this on that list of questions. If you're self-employed.
No, put us on game.
This is a huge thing, man. Self-employed borrowers, when it comes to lenders, it's kind of a catch-22. The way Uncle Sam sees it is, look, if you are going to write off as much as you can, which we totally understand. I mean, I think if I was self-employed, I'd do the exact same thing. But if you write off as much as you can, in the sense that, hey, I had whatever sort of, however you and your CPA or whoever you do your taxes with, or however you go about your taxes, if you write that off, Uncle Sam's going to simply state, hey, if you're not paying taxes on it, we're not going to allow you to utilize it to qualify for a loan that we're lending. So if you make $150,000 a month and all you can show on your tax returns is $28,000, we're qualifying you with $28,000. That's it. So if you plan on purchasing, or if you know you're going to refinance, or if you think you're in the process of refinancing, or if you're possibly going to refinance, you're possibly going to purchase, and you're self-employed, highly suggest for the year previously or that year, claim your income. Claim as much of it as you possibly can. You'll take the L for that one tax year, but you will be taking the L from the convenience of your couch in your new residence.
Right.
That's one of those things that, I mean, you'd be surprised. Like, I can literally work with individuals who have, if they don't have all of the facets, like all of the criteria, we can't take 2 out of 3. Like, you can have 740 credit and you can have $100,000 worth of cash in the bank. If you have a tax return that shows that you have, $30,000 worth of income yearly, I probably can't get you qualified for $300,000. You can have $100,000 in cash and you can make $200,000 a month. If your credit's showing 620, I can't do nothing for you.
Wow.
And obviously you can have 740 credit and you can have $150,000 worth of income on a monthly basis. The asset portion of it, we can get around that just because there's ways to either come up with money for down payment, like we talked about earlier, or and I'm sure Courtney can attest as well, your seller can help cover some of your costs for your loan. There's ways to where you don't necessarily have to come out of pocket when it comes to a closing cost as well. So
not in California. I'm sure in other states. Not in California, no.
It's hard. It's hard. I will say,
yeah.
They have to you got to
buyers
offer
don't
like
have any rights in California.
Right. Yeah. You got to offer like a whole nother 100,000 almost just to get them to say, yeah, we'll sign off on 6% of your seller's concession. So,
yeah, the seller doesn't have any rights, but if you present as a seller, if you have all your disclosures, if you have your inspection, if you have your appraisal, you have everything all in line, right? And then you have the buyer come through. The buyer does have leverage once you get into escrow because they don't want to jump off the market. So that's one way of trying to get some sort of leverage as a buyer. But yeah, you can have no rights.
I will definitely note that. I will note that.
That's something. Only way to have leverage because you don't want to go back on the market.
No, I didn't actually. Ironically enough, I have a loan that I'm working on right now with a gentleman out in Washington, and his realtor reached out to me like I would say maybe 2 weeks after we started the process, and they reduced the purchase price by like $4,000, and then on top of reducing the purchase price, they increased the seller's concessions from like $2,000 to $9,000. And so I was like, hey, is there something wrong with the inspection? Like, did something like not show up right? Or was there, she was like, no, they just know that they have a committed borrower that's qualified, so they don't want to take the chance of losing. I was like, wow.
Don't take the chance of losing it. That's crazy.
That is definitely a first. But yeah, when you got a veteran like that, that's a VA, VA loan program where you know that they can get everything financed and they have good credit and you've already seen the pre-approval letter, you're right. They definitely have a little bit more leverage at that stage.
And no one wants to go back on the market. And then if you go back on the market, everyone's like, well, why are you going back?
What's wrong with the house?
What's wrong with the house?
Yeah.
And that's the first thing. That's what I'm dealing with right now. I said, how'd you lose the deal? And she said, oh, COVID happened. And first time home buyers, and they did not want to, they just got cold feet. That's what she said. They just, who knows what really happened. Some realtors are real honest with you, and some are just, playing, they don't want to show their hand. But she's back on the market now, and she's got to go back to all those previous people that didn't win the contract and say, hey, there's nothing wrong with the house. Come back to me.
Baby, come back.
Baby, come back to me. Nobody wants to be in that position. So yeah, in that respect, you as a buyer have the rights. But prior to that,
what market are you in California?
Northern California, Silicon Valley, the Bay. Okay. The Bay, all over the Bay. So
my wife has a really good friend. Well, actually, she's a good mutual friend of both of ours that actually is out there near you. She does very well though. I think she's a broker. So she does like both front end and back end, which is essentially where I'm trying to get to.
Okay.
But yeah, that's
we'll have to talk offline.
Yeah, we will. We'll definitely have to get y'all in contact.
Absolutely.
Well, I think we have covered just about everything I'm just going down my quick list.
Right. So, because the last question we were going to ask was what's the temperature of the market, but I think we've covered that.
Yeah, you went above and beyond. And to be quite honest, Ray, I told Kim, I don't know what all to ask him. I'm trying to blank on what questions to ask, but you've been awesome with providing the type of information, especially, I think the piece that you shared about if you're self-employed, a lot of people don't consider that. They're just looking at securing the bag. They don't really understand how important it is to show that income on your taxes. So thank you for that nugget. Is there anything that you want to share that you think that our listeners might find particularly helpful?
So exactly what I was trying to think of as we speak.
We usually talk about, just like inspirational things or any things like that you want to share, or books, podcasts, or something, podcasts, or
okay, let Kim ask about the book.
Or we can even be fun because this is during the COVID situation. So if you're not reading anything, maybe you're binging out on a show, something like that. We're open to it.
One thing I was going to say that when it comes down to for those who are trying to purchase or kind of have a little bit of the apprehension when it comes to purchasing, not sure if it's for you, just for not sure if you're prepared and so forth. The one thing I would say is man, just take the time to reach out or go online and fill out the little information so somebody can contact you so that you can at least have the conversation. There's so many people that are paying way more for rent than what you would pay for a home, and there are so many different loan scenarios and options that we kind of touched on briefly here, but it's just a lot of different facets to it, to where even in some of my down payment assistance options, or scenarios, I've literally seen people get paid to get keys to a house. So there's no reason why I would tell you not to at least just try and see how, what's available for you. It might be a roll of the dice, and ultimately you might end up being in the same position that you're currently in, but at least you have the knowledge and the I guess the wisdom per se to see exactly where you stand and what's necessary in order for you to get, to the next position. But home ownership, it's one of those things that they deem as kind of like the American dream, but it's really not something that is as stifling or as chaotic or crazy as people think it is. It's quite frankly, I think probably just as easier, if not easier, than purchasing a vehicle. Outside of that, man, we just binge watched Ozarks for the last 5 days.
Me too.
And I'm not gonna lie to you, I don't know where we were for the last 4 years when we missed the first 2 seasons. So that was amazing, and I think he's giving me inspiration to not only take this residential mortgage stuff to the commercial residential. I want to
Me too. I want to learn the commercial side. Me too.
Yeah, I'm anxious to get to that point, but I think that again, the idea of having just a multi-unit residence, man, just starting with a duplex and then going from there to something like a 4-unit residence, something like that. It puts you in a position where you can start looking at commercial and actually seeing things come to fruition. But that's my 2 cents. That's kind of where I see myself going with it.
Yes, and multi-unit, we've talked about that in the past, especially with the life hack of, or housing hack of living on one side and renting out the other and having the other side pay for your side. So you can essentially pay, what people pay in rent is usually less than someone's mortgage, right? So if you have a duplex, more than likely you can get it financed to the fact that you rent out the other side. It's completely paying for your living as well. So absolutely. Yeah, that's really good information for them to just try it out and look it up and see what they can get. So, okay, well, this was great. Thank you so much, Raymond. And let's start off with telling people how to reach you, because since you are licensed in 15 states, I'm pretty sure you can help out a lot of people, but how can people reach you?
Yeah, you can reach me via my direct phone number at the office. It's just 469-324-4292. Obviously, with none of us being in the office, everything is obviously forwarded to my cell phone. And then anytime you Google my name along with New American, you can always check out my reviews and everything else online.
Awesome.
I love it. You in the Bay? You doing business in the Bay?
I do business everywhere on the West Coast. I got Washington, Oregon, Cali, all the way down in Nevada and Arizona. And then on the East Coast, I am in New Jersey, Pennsylvania, Massachusetts, Virginia, Maryland, North Carolina, South Carolina, Tennessee, Florida, Louisiana. Missing something.
All of them. All 50.
All
50.
Not quite, but not quite yet. But yeah, a lot of them. But yeah, by all means, man, if you get something in the Bay, or if I come across some, by all means, I would definitely keep you in consideration for sure.
Hey, I like it.
So when we get these like leads, what happens is we get people that are contacting us, obviously, to kind of see what the steps are. So I do like the pre-approval process, and once we get them pre-approved, we offer a realtor concierge service, which I think that, you know, if I don't know anybody in that specific area or state, I definitely highly recommend it. Not only because it gives them, you know, the opportunity to work with a realtor who, you know, knows the area, who's, you know, been vetted, who's patient, but it also offers them a financial incentive because it helps cover some of their costs. But in the event that I, you know somebody in that specific area, I just will send you that client along with their pre-approval and what they have, you know, or what they're trying to accomplish.
That's certainly good to know. I can appreciate it, right? And likewise, all realtors have their preferred loan officers because we know that we can get that deal pushed in front. Oh, Raymond's gonna take care of me first. He's gonna put my stuff up there so we can get this deal closed. You know, we're on a clock. So that's really essential.
This is being recorded, and I know your go-to is probably listening. I'll just go ahead and take that backup role. So if you know something don't go right.
Hey, there's somebody for every situation. You know what I mean? There's somebody for every situation. So there's enough for everybody to eat.
Absolutely.
Everybody eats B.
Everybody, okay. I like it.
Sorry.
All right. Well, thank you, Raymond. Thank you for being our first male interviewee. I really appreciate you. We appreciate you. Any closing remarks, ladies?
No, everybody, make sure you wash your hands and continue to social distance.
20 seconds.
Continue to social distance. And oh, I do have some announcements. Everyone, I gave out the wrong email address last week. It's realwomenre@gmail.com. Also, we have a Facebook group. So if you're looking for a community or ways to virtually network, go find us on Facebook. It is Real Women Real Estate on Facebook. Okay.
Which is the same as our Instagram, because we've gotten several DMs and we appreciate them. So you guys continue to send your questions and everything. If you want to hear about anything specific, you can reach us at Real Women Real Estate. And again, you can just call Ray. Ray if you need a loan.
He dropped some digits.
He dropped the digits, y'all. He dropped the digits. He's a married man though, but call Ray.
That's funny.
Nah, she's gonna answer the phone.
She ain't playing.
I know that's right. Hello.
Hello, here you go.
Okay,
it's
well,
for you.
Well, once again, Remy, thank you so much for joining us. And everyone, that was episode 9. Be safe.
All right.
Peace out. Bye.
I appreciate that. Thank you.
Thank you. Bye.